Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Rick Redding, CEO of the Index Industry Association, to discuss the ESG survey of global asset managers. It shows how asset managers prioritize ESG criteria in making investment decisions. Rick, it's great to see you again. Welcome back to Trade Talks.
Thank you. It's a pleasure to be back with you.
Tell us more about the survey. What's the methodology behind it? What are you trying to establish?
So we started the survey 3 years ago with some of our largest clients, the asset managers, and we wanted to make sure we were keeping up with what they were seeking in ESG indexes. We found from another survey we do that our ESG benchmarks have been growing by about 40% across all our members each year, which is something we just haven't ever seen before in the past. So we started this to make sure we were keeping up and to make sure that our members were positioned to help facilitate the asset managers that are involved in ESG.
So tell us about some of the results. What stood out to you? How are they prioritizing ESG criteria?
Well, it's a little surprising this year to me that it's been very consistent over the 3 years. I kind of thought with the political and geopolitical issues going around ESG that you'd see the asset management community backing off a bit, but in fact, it's been very consistent over the 3 years. Over 80% of them are prioritizing ESG. And one thing that's also very consistent is they believe in the next 2 to 3 years that over half of their portfolios will take ESG into consideration.
Yeah, I found that interesting as well. I thought there would have been a decline in the numbers, but to see it keeping steady is, a good thing for the industry. In terms of demographics, how are asset managers thinking about it in the US?
So surprisingly, there wasn't much difference geographically. We do the survey. We have 34 countries in Europe and in the US. And across the board, the US, some places were actually even more enthusiastic than their European counterparts, which again, I thought, a pretty surprising result.
And let's talk about ESG factors for a moment here, because ESG, it's a subjective idea, right? I mean, values are different. They're not all the same. How are asset managers broadening their view of ESG factors?
Well, I think that, Jill, you hit it on the head, is not everyone thinks of ESG the same way. And I think that's why the number of the indexes continues to grow, because, you and I may agree on 14 of the 15 factors, but if we don't agree on one, we have to create indexes for the ones that have slightly different preferences. So what we've seen this year, which is a little bit different, is it seems to be expanding beyond just climate, for example, in the E, and also much more stronger orientation towards the societal, the S, and the G governance piece than we've seen in the past as well.
And you're starting to see the ESG asset class broaden out as well.
Yes, I mean, this is some really interesting data from the survey. Is the first year, 3 years ago, ESG was pretty much an equity phenomena. Last year, we saw the fixed income markets actually catch up. And this year, surprisingly, commodities ranked really high, which had never done before in the past. So it looks to us like the asset management community is starting to think about ESG more holistically and not just, it's just an equities phenomena.
Are they seeing improvement in ESG tools? I know data is always a concern.
Yeah, this year the data came out and said that they think the data quality has been improving pretty dramatically, but there's still a lot more work they think needs to be done. For example, if you think about in E, climate data is generally pretty good. Across the globe, some of the S and G data is a bit harder to come by, and especially quantitative data. So there's a lot more subjectivity in where some of that S and G comes from.
And finally, when we think about emerging technologies such as AI and machine learning, is that going to be a game changer in the ESG space?
This is something that cropped up in this year's survey. Great to point that out. About half of the managers felt that in the next 2 to 3 years, that AI and big data and kind of the Internet of Things would actually help create better data. And it to be used for the benchmarks and ultimately for portfolios for clients.
All right. We appreciate the insight as always, Rick. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.